Welcome back, 821, your time. Jobs and the GDP, they're up, while tax rates and unemployment, they are down. Good signs for the economy, but not necessarily good signs for these historic low interest rates, at least going forward. Here to explain exactly what this means to you is our own Fox 5 real estate expert, John Adams. John, how you doing, man?
I'm great. Glad to be here, and the economy is smoking.
Yeah,
everything's looking good.
It is, and we've been talking about this for years. When are these rates going to start creeping back up? I think the time's here, huh?
It is. Rates are up over 1% since the first of the year, and we are really expecting that to continue, not just for the remainder of this year, but probably the next couple of years. After that, your crystal ball gets pretty cloudy.
Right, of course.
But it's likely we're going to see creeping higher rates. Nothing crazy, but slowly higher rates.
Incremental's good, probably. So break it down for us. What do we need to know here?
Well, the Federal Reserve announced yesterday the core inflation index for the last 12 months said everything cost about 2% more. If you've been to the gas station recently, you've seen that. And things are just creeping up a little bit. Why is 2% important? It's because we haven't seen that high core inflation since 2012. And of course, the recession was in full bore at that point. So that means we are really out of that problem, and we are putting jobs on the table.
Okay, so how does the Federal Reserve try to cool things off here?
Well, they act like a radiator. Anytime you see that type of inflation starting to creep up, you begin worrying about inflation, which is not good. You know, runaway is not good for anybody. And so what I expect is we're going to continue seeing the Federal Reserve will raise interest rates. As they raise interest rates, that draws money out of the stock market and brings it into things like bonds. So what that means is that will cool off the stock market. They won't have as much money to spend.
All right. So that doesn't sound like great news, at least if you're invested in the stock market. But there is some good news to this here, right?
Well, there is. There is good news to this. And what that means is there are three things we can do right now to take advantage of this situation. So let's just take a look at them. The first is I would eliminate all adjustable rate mortgage debt right now. Anything you've got out there that has an adjustable rate, things like credit cards, auto loans, things like personal and paycheck loans, even some student loans are on an adjustable rate basis, and we need to find a way to convert those. Either call the lender and say, I want to make this a fixed rate, or find a way to replace it. That will help protect you. The second thing you want to do is move toward long-term debt and fixed rate debt. So if you've got a house that's paid off, or a house that is close to paid off, I'd pull some cash out of that, lock it in at today's low rate, which by the way is around 4.5%, 30-year fixed rate. That's not as low as we were talking about a year. We got spoiled. But I predict we're going to see even higher than that. And when we do, that 4.5% is going to look very, very attractive. And I'd pull that out. You can pull money out of your house and invest it in things that will pay you more, and you earn money in the long run.
And then, of course, real estate, right?
Well, third thing is there are a lot of people, Buck, that have a huge amount of money sitting in their 401k, sitting in their IRA because they don't know what to do with it. And their asset manager is saying, well, let's leave it in cash and be safe. It's earning 0%. Now is the time to do something with that money. And with recent changes in federal law, you can have a 401k, you can have an IRA, and still own rental real estate. And that has always traditionally been a very good hedge against inflation. I think we are going to see some inflation. But I would encourage people to consider diversifying their retirement.
We're out of time, but I love your answer to this next question. If a millennial's thinking about buying a house, what do they need to do today?
Watch the rest of this show,
do that
turn off the television, and then rush out and buy a house today.
There you go.